Hey there, what is it that you do when you miss a trade? You've been looking for this particular trade setup, but for whatever reason, you missed it. You weren't around when the trade triggered, and it's something you want to get into, but you're too late. There's a couple of different things that we can do to get in on a trade we missed. So let's go to the charts. We'll take a look at a couple of different examples of what you can do to get into a missed trade. So this is the Australian dollar US dollar. We've talked about this one a few different times. There's a really interesting pattern going on here. High, higher high into the HLH, and then it moved down to its previous swing low. And that's what we're trying to capture on this. That event has happened so many times that that's the trade we're looking to take. Now, a lot of traders have missed that opportunity. This was the signal to go short in here. But what happens if you still want to get in on this, because there is some room left, but you missed that entry? You want to get in on this trade. Now, there's a couple of different things that we can do. So I've got a template that has no lines marked up on it whatsoever. So the first thing I'm going to do is draw a line down at the bottom here, because this is a horizontal line of support and resistance. This is a potential target. So this is something we're keeping an eye on. And again, we wanted to get in on this trade right in here. A couple of different reasons we could have done it. The actuator turned red, dots changed sides, the close below the trend line. Whatever the case is, we had this wonderful setup that we missed. Now, I don't want to just jump into a trade without some kind of signal. That lowers the probability of a successful trade. The market could turn around. We may move a little bit further in the direction we want, and then it goes against us. But you know what it's like when you're chasing a trade, and that's what that would be. When you're chasing a trade, it generally does not work out in your favor. You chase a trade, you get in late, market doesn't continue to move, and you get stopped out. So what we need to do is look for different entries, actual entry signals. Now, the first one that we could be looking at is just a very basic support and resistance type of entry. In this example here, we've had the market move down and then pop back up again. So with that, underneath this level, this low, this swing low, this area of support, we could be placing an entry. As soon as the price gets to just below this level, this would be where we'd enter the trade. So we'd go short just in here. Our stop loss would go just above that recent swing high. This gives us about a 1-to-1 target on this trade, and we are not risking too much. We're not chasing the trade. If the market does not follow through, we do not get into the trade, and that is kind of a lifesaver for that particular trade. So this is one opportunity. We could be looking for that area of support resistance. We want that bounce to happen before we look at entering the trade. The next thing we can do is get in on a smaller time frame. So if I go down to the 4-hour, we notice we have opportunity on the 4-hour. This was the original swing low, the one that we marked off on the daily time frame. But on the 4-hour, we've got this market moving up. So I could draw a trend line underneath that market that's making these higher lows. Now, I love this kind of setup. This is something that the Forex Masonry members, we call the UTS, the Ultimate Trade Setup. The probability for this kind of trade is really, really high. So the lower time frame is going to give us some really good opportunities. With the higher time frame, we have a target in mind. Now, that is a really important feature to keep in mind. When you have a target in mind, you've got a direction, you know how far the price is going to go, and that is how you're going to play trades on a lower time frame. With us, we've got the trend line. We've got the actuator, can signal a short trade. We've got the dots. They will also signal a short trade. So in this area here, we are looking to go short. We've got everything going on at the same exact time. I do not want to take a counter trend trade. I want to get in on the trade that I missed. And with this, you can reduce the stop loss. If our entry was in here, our stop loss would go just above that swing high, and our target is, it's down here. So this becomes our target. We have about a 2-to-1 on this one. Well, let's see for sure. So we've got about a 50 pip stop and 100 and change target. So we still know where the market's going, and we get a better opportunity on this one on a lower time frame. Now, I do not want to get too low as far as the time frame goes. This assessment we've made was on the daily time frame. So if we're looking at a 15-minute time frame for a trade, it could potentially go in our direction, but we're going to get a lot of this noise, a lot of this chop that goes against us. Overall, it'll go in the right direction, but it will take these periods where it does go against us, and you will be stopped out prematurely. So if you're trading the daily time frame, you missed the trade and you're looking for an opportunity to get in, look for an area of support or resistance that you can trade, or go down a single time frame and find the better setup from there. This may be a different setup. If you're using a stochastic oscillator, maybe it's the crossover from an overbought zone. If you're using an RSI, maybe it's the crossover of the 50 level. Whatever the case is, we're essentially looking for a pullback and then a way to take the trade in the trending direction from the smaller time frame. So that's the end of this video. I hope that helped. If you're looking to get in on a trade that you missed, do not chase it. Do not just get into the trade because you missed it. Either wait for a pullback on the time frame that you missed it on, or switch down to a lower time frame. And I wouldn't go too low. I'd go maybe one time frame lower, look for a pullback. It could also be a level of support and resistance, or it could be a trigger of whatever it is that you're using that gets you into a position. So if you're looking for that short trade that you missed, look for only short trades on the lower time frame. You'll get a better fill, you'll get a better stop loss, and your profit target could still be potentially pretty big. Thank you for watching this video. Give it a like if this was valuable to you, if you got some information out of this, and consider becoming a member of Forex Masonry. We offer a lot of trading education without the whole lot of clutter that you're going to find on YouTube and in general Forex areas. If I don't see you in the Forex Masonry members area, I will see you in the next video.